right. Well, welcome everybody. And if you're watching this afterwards and you missed it live, I hope that you're still going to get something out of this. So, in the state of Illinois, a whole bunch of laws have changed, requiring reporting, um, vacations, time off, sick leave, things like that, when it comes to W-2 employees. And I think there's always been a big discussion when you start hiring people, whether or not they're going to be W-2s or 1099s. And this is where Joseph Salah's, well, his expertise, quite frankly, comes into play. And that's why I invited him to just do a presentation for us. Um, but without further ado, Joe, please, I'm going to let you take it from here. And thank you again for doing this.
Anytime, Charlie, I'm happy to do it. I also appreciate that you used my name and the word expertise in the same sentence. That always feels good. But just going to go ahead and get started right here. Today we're just going to cover navigating business essentials. Again, my name is Joe Salah. I am a business consultant with Vensure Employer Solutions. I work with businesses typically between 1 to 1,000 employees, so pretty big spectrum there. I've encountered a lot of sort of administrative questions throughout the tenure of my career. And I tried to sort of tailor today's conversation and presentation around what would be directly relevant to home inspection companies, as well as contractors and real estate professionals in general. So just want to briefly kind of cover the agenda today. So first thing we're going to do is I'm going to go through an introduction, go a little bit into my background, why you should spend your Thursday evening listening to what I have to say. We're going to then go dive into payroll tax liability and S-Corps. I'm sure most of the people that end up listening to this are familiar with those terms and that terminology, but we're going to do a little bit of a deeper dive into it. Not really the most exciting part of the presentation, but it is very important to make sure that you have a fundamental understanding of what to do there. Then we'll jump into workers' comp guidelines. I get tons of questions about this from all of my businesses, not just real estate. We'll go a little bit into state mandates because, as Charlie mentioned at the beginning of this call, whether you are a business owner in Illinois or whether you know a business owner in Illinois, it is an absolute blast to try to keep up with the amount and frequency that they tend to move their goalposts. So we'll dive into a couple of the hot topics with that. And then we'll cover distinguishing W-2 employees from 1099 contractors, which seems to be pretty confusing for a lot of people. And the main reason for that is because it is. There's a lot that goes into it, and there's very few people that tend to feel qualified enough to be confident that they're not going to get in trouble down the road for misclassifying an employee. And then we'll finish up just kind of diving a little bit into HR compliance and what a PEO is. Throughout the course of this, I am going to be doing sort of high-level overviews of things. We're going to dive a little bit deeper into certain topics, but I have the chat open. I got Charlie on speed dial. If anybody has any questions or if you want to pause me and go a little bit deeper into something you feel like I sort of glossed over, please feel free to. So quick introduction. Who am I? I am, again, Joe Salah. I'm an HCM SMB consultant. I've been that for about 3 years. So really quick, HCM, for those of you that don't know, stands for Human Capital Management, which essentially is the lifeblood of your company. It's your workers, it's your employees, it's your contractors. It's your greatest asset and your biggest liability. And I've been doing that for about 3 years. I specialize in HR and administrative technology. So specifically, we're talking about payroll administration, onboarding, making sure that everything is sort of good under the hood to make sure that nobody gets in trouble down the road or risks anything from a compliance standpoint. Also, just generally making the administrative side of running your business a little bit smoother. Before that, I was a diagnostic imaging technologist for 5 years. So kind of a curveball to switch up into business. I was in the medical field for a good amount of time. But while I was there, I sort of found myself assimilating into more of an instructional and training role. Found my strengths there, and now I get the sense of fulfillment from helping business owners rather than patients, but it's been great. And before that, for 8 years, I was in restaurant management. So I learned a lot in that stretch of time. I will say patience is probably the number one thing I learned. Number two was that I never want to own or run another restaurant. And then I also have a family full of entrepreneurs. I know it's a little bit cheesy, but I do feel like it's in my blood. I know my wife and I definitely want to start our own business in the next 5 years here. All of my uncles own businesses. My dad has owned businesses since I was 4 years old. And I really truly am looking to sort of, carry on the torch in that regard. So first thing I want to sort of dive into is payroll taxes and S-Corps. So what exactly does that mean? So the first thing I'll kind of cover is just a general overview. These are probably the most common business structures that you're all familiar with. So obviously an LLC, most people, especially startups, will start as an LLC just to separate liability from themselves and the company. You have your corporations, nonprofits, and then we get to S corporations. So a lot of people I talk to aren't necessarily familiar with exactly what an S corporation is. There's a few different options. You can restructure or you can remain an LLC and elect to be taxed as an S corp, which is something we're going to dive into here shortly. So what is an S corp? First of all, an S corp gets its name, right, from subchapter S of their IRS code. That's really all it is. Some people say it stands for small business, small corp, whatever, all pretty much the same thing. But the interesting thing is what it does from a business owner's perspective is that it allows you to W-2 yourself as an employee of your own company, which we'll dive into a little bit in the next couple slides, but it's beneficial for tax purposes. So the entity will pay wages and salaries to the owner or owners that are sort of splitting ownership. The remaining net earnings of that money that's being paid out are not subject to the SECA tax. So for those of you that don't know what the SECA tax is, it is the self-employer contribution amount. Essentially, those of you that have been a W-2 employee or those of you that have W-2 employees working for you are or should be familiar with FICA tax. That's a breakdown of Social Security and Medicare that you split between yourself as the employer and your employee. If you're a business owner and you have no W-2 employees that you're splitting it with, you're paying the full brunt of that yourself. Thus, you get the SECA tax or the SECA. And with S Corps, as I mentioned before, you can remain structured as an LLC and elect to be taxed as an S Corp, which may or may not, depending on your income, prove to be financially beneficial for you down the road. So this is a brief overview of income tax figures that I wanted you guys to look at really quickly. So if you look here, I'm not sure if you can see my mouse swirling, but we have the Social Security and the Medicare. Those are both FICA taxes. Those are both divided evenly between employer and employee. Then you have the federal unemployment tax, the state unemployment tax, and you have income tax. Obviously, business owners are subjected to a lot of tax, but the point I'm trying to illustrate here is that minimizing even one column of this can be paramount because I think, and I'm sure anybody would agree, that we pay more than enough money in business taxes being in Illinois and really just, on a federal level. So quick example for you guys with an S Corp. Let's say that there's an entity that's taxed as an LLC, right? If they have $70,000 of net income, they're paying about $10,000 in the SECA tax that we discussed before. Whereas if they're taxed as an S Corp, that same $70,000 of net income, they'll take $40,000 of that as a salary, which means that only the $40,000 is taxed under the SECA. The remaining $30,000 can be collected as a distribution to the owner, or they can reinvest it into the business tax-free. So they're essentially saving about $4,000 in this model by being taxed as an S Corp rather than just an LLC. So
Now, does it matter how much money you take as a salary and how much you take as distribution? Why
it's a
not
great
just take
question.
it all as
So
distribution?
yeah, no, it's a great question. And that's so I put reasonable salary with fancy little asterisks there. And the reason that I use that terminology is because that is what every accountant and CPA in the capacity of an S Corp is for. So they will advise you on what a reasonable salary and a reasonable distribution is. Anybody that isn't a CPA or maybe a financial advisor with fiduciary responsibilities cannot tell you what that amount is. And you really, even if you're pretty concrete on what you think it might be, shouldn't take that risk. Because as we'll cover sort of later in the presentation, one of the cons of structuring as an S Corp is closer IRS scrutiny. So they're really going to be keeping an eye on you because you have everything on the books. And the last thing you want to do is pay yourself too much so that you're paying less in taxes when in reality you should have paid yourself a little bit more of a salary to sort of stay on the books, if that makes sense.
Because I just get confused by all that because I get frustrated at the end of the year whenever we turn a profit. All of a sudden, that profit that's in the business, and I don't get to use that personally, but I'm paying personal taxes on it as income. And
Yeah.
I cry like a little baby when that happens.
I think most people that run their business does. I mean, you're doing all the work, you're turning the profit, and you're generating the business for your company to be successful. So it's kind of I guess a bummer, for lack of better words, to fork over this heaping amount of money at the end of the year to appease the IRS. But that is why it's so important to stay educated on things like this because if you can save even 5% annually on your taxes, I mean that stuff you can reinvest into equipment, training for your employees. So it all really matters. Um, and just a brief overview of the pros and cons of an S-Corp. Pros, we're avoiding double taxation. Like we said, with the SECA tax, avoiding that with a distribution amount is huge, depending on your income amount, thus translating to lower tax liability. It's great for small businesses, and you still retain the protected assets if you remain an LLC. Cons, you really need to be generating at least 40 grand of annual profit for this to make sense. Just because there are some fees and hoops you need to jump through to maintain your S Corp status. For those of you that are looking to grow to where this second bullet point would be an issue, 100 shareholder limit is placed on that so that you can't keep reaping the benefits as your shareholder dividends increase. Sort of a ceiling on that. Really only one class of stock, and like I mentioned before, closer IRS scrutiny. Something else that seems to come as a shock to a lot of business owners I talk to is state unemployment insurance. A lot of states have this. Illinois is no exception. Every company, even if they have one employee, even if that employee is the owner themselves, they are required to form a SUI ID and pay state unemployment insurance, which is how it is. You can register for free at mytax.illinois.gov if you don't have one, although hopefully most of the business owners that are in the situation that need one already have one. It's something I walk through all my clients with. It takes about 45 minutes, but I would definitely recommend to double check that. New employers, typically around 3.95% is what they're paying. And experienced employers, depending on the claims that they've received for unemployment, are anywhere between 0.85 and 8.65. It's a quick anecdote here, something I encountered, especially right after COVID. Obviously, tons of people were claiming unemployment. And so everybody's rates just began to shot up or began to shoot up. So it's important to keep that as low as possible, which is what ties HR into this whole situation. Because if you're making sure that you're terminating employees properly by the book, you have a handbook in place, a lot of the times you can avoid or even contest unemployment claims that could be illegitimate and save yourself the hassle of having an increased rate for another year. So now that we've covered the basics of what goes into paying, employees and 1099s and all that stuff, here's some quick benefits of automating payroll. Now, again, yes, this is something my company covers, but regardless, whether or not you would want to go with my company, I suggest anybody that has wages do this with any company that they trust, because it saves yourself a big headache. Mostly, we'll just kind of go down the list here. You're eliminating manual errors. I work with CPAs all of the time. They're probably the most qualified financial, I guess, profession, maybe next to, financial advisors. None of them want to handle payroll ever because for them, on a grand scale, yeah, it's simple, but there's just so much opportunity for them to make errors that can be catastrophic for a business owner. They don't even want to touch it. So streamlining that and automating it takes the burden off of them. It takes the burden off of you. It's all around a win-win typically. You'll save time, increase efficiency. You can focus on the business, obviously. Data security. This is one that, especially for people that have been in business for a long time, they tend to sort of underestimate. And the reason for that is because as technology increases, the opportunity for data breaches increases linear with it. So if you have a system where you can store your employees, masked W-4 info, their bank account information, that type of thing. If you store it in an encrypted server or app, which most payroll companies should have, you have that added layer of security, and they're also hold the standard held to standards so that you're not sort of worried about that leaking and you being in trouble for it. Employee retention. So something I mentioned at the beginning of this conversation is that I'm an HCM consultant, human capital management, employees, lifeblood of your company. Employee retention, especially for W-2s and 1099s, although they're not technically employees, it's huge. It costs so much more money to onboard and train and acquire a new talent than it does to retain them. And when they see that they're getting paid on in a timely manner and it's digital and their check breaks down their year to date, it breaks down where all their money's going, they're going to notice that. And that's just one of the very large amount of things you can do to sort of pander towards employee retention. Definitely don't underestimate that. Time and attendance tracking. For those of you that have hourly employees, this is huge, and we'll get into it a little bit later in the slideshow as far as state mandates go, but not having to worry about tracking your employees and tracking their PTO. And are they on site? Are they clocked in properly? Having something that can automate that, geofence it, condense it to an app, it's massive, especially in a time where technology is king. Tracking reports, pretty self-explanatory. You should have instant access to all of your reports when it comes to income, and you should be on top of that. If not for yourself, for your CPA's sake, a lot easier for them to get to log in and look at all those reports themselves and not have to pester you trying to dig through your files to find it for them. And last couple points here, along with the extremely fun task of calculating taxes, figuring out how much everybody's getting paid, you're also responsible for quarterly filings, year-end filings, W-2 distribution for W-2 employees, and even 1099s. If you paid any contractor over $600 in a year, you're responsible for sending them a 1099 at the end of the year. Yeah, they're responsible for paying taxes on their own, but you need to provide them with that paperwork, which is something that most payroll companies, including us, will automate and handle on your behalf. The last one's taxes filed on the company's behalf. So no interactions with the IRS. Both state and federal taxes are handled on your behalf by us. As a business owner, or from a business owner's perspective, I think the less amount of times you need to try to call that office, the better. Not just for your business health, but for your mental health. So that's definitely a great benefit to streamlining something like that.
Can I ask you a question on that one, the taxes and such?
Yeah, definitely.
I've been getting phone calls, and it's like a toll-free number, and it says it's the Illinois, I forgot who it is, but Illinois State something or other, saying that I didn't do my quarterly payroll taxes. I didn't send them in there, or monthly, or whatever it is. And I do use this service, and every time I go in there, everything's done, and I go on the record, it's done. I've never called that number back, and I don't get anything by mail. And I'm assuming that, just because I'm so inundated with spam stuff, is that something that is going on?
So if you have any correspondence from the IRS, it'll also be done via mail. So unless you've received letters claiming that you haven't completed your quarterly filings, or if let's say your SUI ID wasn't filed correctly, because that's done on a quarterly basis as well, then that would be cause for concern. But if you have no letters describing that, or and you haven't received anything, more likely than not, it's just a phishing attempt. And I mean, it's unfortunate, but it happens all the time. And they're really just looking to sort of dig in and, get your personal information, or they'll be like, well, you didn't send this payment, so now you need to send it to IRS dot whatever. And it's like 2 characters off, and now you send a quarterly tax payment to some random, and it's just a nightmare. So I know you're experienced dealing with situations like that. I would definitely, and especially if you said you were able to locate the proof of the filings too digitally.
Yeah.
Yeah, you should be all good to go. But unless you're receiving letters, I don't think it's cause for concern.
Charlie, we get those periodically, and there is not a phone number to call back. They actually direct you to iltax.gov, I think it
That's
is.
it. Yeah.
It's legit. Something's crossing in the mail. I got that phone call day before yesterday, and we're up to date on our stuff. Something's crossing in the mail, or there's
I
a
got it
mix-up.
the day before yesterday too.
Yeah, it's legit. Sorry to disagree with our speaker, but yeah, they're just reminding you. And I don't know, my wife's sitting here, and I think she said, yeah, we had some little glitch with our payroll service and blah blah blah. But yeah, the deal is it's legit. Just make make sure they're directing you if you do get one of those calls to the government thing. And I think, as our speaker said, make sure it's not iltax with two x's.gov. That would be bad.
Thank you.
Definitely. And if you have, Charlie, whichever payroll provider you're using and you're able to log in and view your reports, there should be at least a copy of your 941 filings, any sort of like quarterly filings or correspondence that was done. You can definitely double check with them as well, just to make sure that everything was handled properly. But yeah, it's quarterlies are a big one for sure.
Thank you.
No problem. So we're going to move into workers' comp guidelines just for a moment here. So I did want to show a brief video here, and hopefully you'll be able to hear the audio. If you could just give me a thumbs up in chat when you can hear the audio. Let's see here.
I'm not hearing it. I'm seeing some handsome guy, but not.
He's a good-looking fella. Let me
Not
see
here.
here. Okay. Any audio going on here?
Nothing for me.
Okay. That's all right. Essentially, with workers' comp, and this has always been a hot topic for a variety of different business owners for a bunch of reasons. One of them is, when it comes to W-2 and 1099 and workers' comp coverage, bottom line is with workers' comp is that it must sufficiently cover, obviously, the workers without coverage. Some people are going to have a higher workers' comp rate depending on whether or not they perform jobs at an office desk or they're climbing on ladders or they're on a roof or they're doing demolition. It's important that all that information is accurate and up to date. Always collect a certificate of insurance when dealing with company contractors. Workers' comp laws are going to differ on a state-to-state basis. My best advice to you in this regard, and I speak to a lot of these, is consult an entrepreneurial law attorney or a business attorney. Because especially in Illinois, the last thing you want to do is not offer coverage where you need to, and get penalized for it down the road, or get into a situation where you needed it and didn't have it, or your T's weren't crossed. It's just an important thing to sort of make sure you have support on. Priority number one, if you're bidding on work, typically is to keep your mod rate down, and pay as you go. Workers' comp policies are definitely worth exploring. So a lot of the time, what will happen with workers' comp policies is people will make a balloon payment based on, the appraisal of what type of hours they think are going to be needed to be covered by workers' comp throughout the year. And then they get to their audit period and they realize that they either overpaid and essentially gave an interest-free loan to their insurance company, or they underpaid and then they're surprised with a bombshell bill. Neither one of them is ideal. And a lot of the time when you have a pay-as-you-go plan, that's one that has direct access to your payroll information, and you get to skip the tedious audit process and have everything sort of automatically handled for you.
Let's dwell into that a little bit, because there's a lot of guys that are one-man operations, all right? And a lot of them are going to be LLCs or sub S's and stuff. So is it mandatory, like for me, for example, as the single owner of my business, do I have to have workman's comp on me?
So I consulted a workers' comp provider and an attorney directly before this call a couple days ago, and it is strongly encouraged that even in a situation where you are the only employee of your company, to have workers' comp. Now, is it legally binding? I don't believe so. But if you have one employee, even that is, even if they're in the office or if they're out in the field or whatever they're doing, you are required to offer workers' comp.
You said offer. What's the difference between offer or provide? I mean, is it
I think I was using them
mandatory?
interchangeably. You need to provide. If you have an employee, you definitely need to provide workers' comp, at least as far as Illinois goes. I know that the line gets sort of blurry, and my forte is more in HR and taxes, but workers' comp is something that you definitely want to be on top of. And if you have a trusted attorney or a business advisor, it should be at the top of your check-in list.
And not to go
Yes.
attorney bashing and stuff like that, but I got an old favorite saying, that an attorney is going to protect you right out of business. And, and granted, and that's what I want to do. I want to comply. I don't want to be non-compliant. But if I already have health insurance, what do I need workman's comp for?
So health insurance would sort of be a different thing. And obviously you want supplementary health insurance and, depending on what stage of life you're in and what your pre-existing medical conditions are and all that stuff. Workers' comp is mostly there to protect the business. And so if you're talking about being self-sufficient with coverage, that could be a totally different thing. But if you have even one employee, you're obviously going to need that coverage. But self-sufficient coverage, that would definitely be something to bring up to your attorney or your counsel.
Okay.
So I have a question
Sure.
those lines. So isn't it because I used to have a S corporation and I was sole proprietor. Now I have LLC. But I remember uh, because even if you got the workers' compensation, so as the owners, you could be like kind of like excluded from the workers' compensation. And I know as the owner, I think they have like a different rate. I don't know. Back then, I think they wanted almost like 30% of what you were making if you wanted to be include, um, yourself in your own business to be protected by workers' comp. So I don't know if this is still the same thing or the percentages, changed.
Yeah, no, so that's a great question. And it's really just going to come down to what they discover in the underwriting process. Typically, if you're a newer business, you'll start out with a mod rate of like 1, which is sort of neutral. I believe it's about 3 years without incident, and then it can kind of start to go down. As far as what you're going to be paying, there's such a variety of factors, and this is why our workers' comp department is so scrutinous on quoting businesses too, because they need to make sure they have literally all pieces of information before they can even underwrite policies. So it really depends on, the type of job you're doing, what your actual task list is, how many other employees you have. There's a lot that goes into it. Appreciate the questions though, guys. And then we sort of covered this, but just to kind of briefly review, we pretty much work exclusively with workers' comp pay-as-you-go plans, no audits. I put an exclamation point there because audits are not fun. So getting rid of those is definitely a plus. They directly integrate with your payroll, scales when you're adding or moving employees. And then those rates are actually for SUI. So this is actually one that I get the most sort of shocked reactions from business owners when I dive into, and that is state mandates, because I don't think that they do a great job of communicating this to business owners. So I guess that's why I'm here to try to tell you guys about it. Illinois in particular, first one I want to bring up to you is the Secure Act 2.0. This pertains directly to 401k and retirement. So they passed this law. This happened a couple of years back. It used to be 15 employees. Now it's down to 5. You are required to offer a 401k or other sort of retirement plan to your employees if you have 5 or more employees, which are W-2 employees, or the business, or I'm sorry, and the business has been operational for 2 years. So if you've been operational for 2 years and you have a quarterly report that's going to have 5 W-2s on it, even if you have 4 W-2s and you terminated somebody last month, if it shows up as 5 W-2s, you're going to be required to offer a 401k plan that next quarter. So, and then in little asterisks here, I put multiple states have mandated this, but the affected employee count continues to shrink. I think California is down to 2, which is kind of crazy to me, but it's not all mandate and, doom and gloom. 401k plans definitely have their benefits. First of all, tax credit incentive for a 401k plan is pretty massive because of the mandate. up to 5,000 a year for the first 3 years. Now it depends obviously on how many people are participating in the plan. But that should more than pay for the administrative fees of running a 401k plan for your employees. Lower payroll tax liability. I'm sure most of you know this, but the money that comes out of paychecks to go into a 401k plan is all pre-tax. So that money's coming out. Thus, you're not paying or splitting the FICA tax liability with the employee on the money that they decide to put into your 401k plan. Therefore, it
Well, that
lowers your
lowers
tax
our
liability.
taxes too.
Yep, exactly. Employee retention. I've touched on this a lot through this presentation, so bear with me. Employee retention is massive, and a 401k plan has almost become a staple, not only for employee retention, but for talent acquisition. A lot of people won't even apply to a company that isn't offering a 401k plan nowadays. The funds are transferable. It has 100% integration with payroll, depending on what route you take. So you typically are able to set a contribution amount or have the employee set a contribution amount, have it automatically get deducted and put into the 401k plan, and you don't really need to worry about it whatsoever. And then, of course, retirement, right? Because that's sort of the name of the game. Social Security isn't something that we can rely on, unfortunately. And a lot of people make the mistake of over-evaluating their business. I've talked to tons of people that are like, well, my retirement plan is I'm just going to sell my company. And that's great. And I hope that they're able to do that. But it never hurts to have supplementary retirement funds like a 401k or even a Roth IRA. The second mandate, which is the most recent one, is the Illinois paid leave for all mandate. So this actually was just most recently updated July 1st. All W-2 employees are included, whether they're full-time or part-time. Essentially, they're required to accrue 1 hour of PTO for every 36 hours worked.
So
I
does
think if
that
you're
include
full-time,
me?
I'm sorry, what's that?
Does that include me?
I don't think many of these benefit the business owners too much, Charlie, unfortunately. But
Okay, good. No, I just don't because I'm not doing this. That's the whole
right.
thing.
Yeah, no, it's for any employees that you're gonna have working. Let's say you get like a full-time office administrator or something.
Yeah.
By the end of the year, he or she's gonna essentially have 5 days of PTO, and also 5 days of sick leave, which we'll cover in the next slide too. The employee is entitled to use PTO after 90 days of employment. So a lot of times businesses will say you accrue PTO at this rate, but until you're at 6 months, you can't tap into it. It's mandated at 90 days maximum. It has to be accurately tracked. They are starting to audit these types of things. I'm not entirely positive how they're doing it. They might be looking at W-3s. I'm not really sure. But it has to be accurately tracked and accrued to at least 1 hour per 36 worked. And the PTO policy must be clear and employee acknowledged, which kind of brings us back around to having an up-to-date handbook. For those of you that don't have an employee handbook, it is the most underestimated and courtroom subpoena document in any sort of litigious situation with businesses. I definitely recommend either having an HR business partner or somebody make sure that yours is up to date and compliant. And then the Illinois Sick Leave Act. So pretty similar. Any W-2 is included. Employee needs to accrue 1 hour of sick leave for every 36 hours worked, required in conjunction with PTO. The employee needs to be allowed to take up to 6 months of sick leave at a time if requested. So if there's, God forbid, some sort of catastrophic situation where a loved one is, really ill or they're unable to come to work for whatever reason, they are allowed to request up to 6 months of sick leave at a time. And no disciplinary action can be taken against the employee in that situation. Not saying anybody in this call would do something like that, but just so you know, it is prohibited by the state of Illinois.
I have a question on that.
Yeah.
Is it how formal does that request have to be? Is it like a text message? Hey, I need to take off because my wife is sick, or is there a form we should come up with? What would be the recommendation?
So that's a great question. Just document it. So whether you're doing things, my personal recommendation is get your PTO accrual and your time and attendance streamlined so that you have records of it. Have the employee use an app through your payroll provider or whatever system you're using. You can have it to where there's a PTO form in the office. Lots of companies are remote now, so that's not really viable. Plus, stuff gets lost all the time. I personally think the best route is just to fully digitalize it so that if you ever need to go back to it, you can always pull those records up and you're covered. Not to mention with PTO accrual, if they're hourly, whatever your policy is, as long as it hits the state minimum, you're good because it'll automatically track it and accrue it for you. And the employee can just sort of log in and request time off, and you can then approve or deny it, and it's all sort of tracked for you. How to streamline PTO and sick leave. So this actually goes right with your question. I always recommend to integrate it with payroll. 100%. I mean, there's no better way to do it. You're already paying them through a software. I guarantee you, whoever you're using, whether it's me with Vensure or it's ADP or whoever, there's always, for the most part, going to be an option for you to integrate it with the payroll and have it just sort of automatically track. A lot of companies will even have it to where the employee can clock in, clock out through the app and geofence it in so that they can't clock in on the ride to work or whatever. They can't log in until they're out of the shop. However you want to set it up. Always have a PTO and sick leave policy acknowledged in the handbook. This is massive. Even if your only employees or family members, I always recommend to include that in the handbook, along with PTO tracking technology that I just covered with Jamie and employee app participation. It just makes your life a million times easier as a business owner. All right, moving right along, just going to get into some W-2 versus 1099 discrepancies. This is probably the hottest topic that I get questions about all the time from my clients and my prospects alike. So, we'll start with W-2s. How do you identify a W-2 employee? Well, the first question that you sort of need to ask yourself is, how much control do you have over this worker? Are you telling them which job sites to be on at what time? Are you telling them what their uniform is? Are you telling them where to buy supplies from? Typically, the more control you have over an employee in those regards, the closer you are to needing to make them a W-2 employee. Do they have expenses reimbursed? If they do, that's another factor of a W-2 employee. Set schedule. Again, if they're working a certain amount of hours a week outside of some other very specific instances, that's usually leaning towards W-2. Job task diversity. If you're providing or paying for any training that this employee or worker might have, that's also a good indicator that they probably are leaning towards W-2. And then required certifications and funding them. That sort of fits in to the reimbursed expenses territory because essentially you're investing in this, worker. Again, great indicator that they probably should be a W-2 employee.
We delve into some of that a little bit more, and
Yeah, no, I'd love to.
I'm gonna this is my personal thing. So a lot of my competitors that I value, they tell me that everybody should be a W-2. We've got Jamie and I have a friend down in Florida who almost went bankrupt, because he subcontracted all of his employees and he got hit real heavy on that, and he lost just about everything. But he made it through it. So I want to make sure that if I'm putting my family in jeopardy, that I need to change what I'm doing. All right. So I know you say how much control over this, but we really don't know what that number is over the employee. So let's go after the reimbursed expenses and stuff.
Sure.
So I don't reimburse anybody for parking or gas or, tools or anything else. But what I do is, like, some of our equipment is rather expensive. So I pay for it and I let the guys work it off. There's no interest or anything else like that. They just pay like $100 a paycheck until it's all paid off. I know it's a risk on my part because they could just leave and take the equipment. It's theirs. And is that a reimbursed expense?
How do you document it?
We do it in their invoices. So again, we subcontract with FEIN numbers. So they have to be an S or an LLC, and then they have to provide an invoice. So, we buy it up front and we go, here's the balance, and then just knock it off, in a reduction of your invoice twice a month.
Mm-hmm. Yeah, and that's a great question. Honestly, it's such a specific example because you're not technically reimbursing them for something, but you are almost, and correct me if I'm wrong, you're almost like fronting
I
the
am.
expense, that's sort of what you're doing, right? It's fronting the expense, and then
Yeah,
they're still paying for it, but you're fronting it.
correct.
Um,
It's an interest-free loan is how I look at it.
yeah, definitely. And I wish I could give you a concrete answer on that. You might be towing the line with that. Now, is that something that would, get you caught up in an audit? I don't think so. But
Okay.
I personally can't tell you with enough certainty to like, you bring up your family and stuff like that. And like, I'm not going to give you any bad advice. So my my best advice to you in that scenario, Charlie, honestly, is I would connect, and I can definitely connect you with somebody as well, with either an HR business partner or an
Yeah.
entrepreneurial law attorney, and write down
I,
specific scenarios like that one, because you want to make sure that you got everything buttoned up for a scenario like that. That's a great question. I wish I had a
I
better answer for you.
No, that's all good. I value that, believe it or not. I really do. So let's go after the set schedule then.
Mhm.
So I let our guys decide how many days they want to work and they pick and choose. And then if they get a job on their own, they could take themselves off the calendar anytime that they want to, right?
Yep.
But when a client does book that spot, I do expect them to do the inspection. I don't expect them to say, "Oh, I got a job of my own, so I'm not going to do yours." That'll
Of
break a
course.
relationship with me. Is that
Yeah.
mean that I'm setting their schedule?
No. So that is actually a great way to handle it. And I had this specific question with another real estate professional. They essentially would post these contracted jobs into like a board, and they would have contractors sort of bid on the work, or like, first come, first serve basis. So they almost had a schedule set to where, okay, we have this many, home inspections, or we have this many property visits a week. But first come, first serve. So they were giving them the option to turn down the work if they wanted to. And that's very 1099 leaning. So I think the way that you're handling that's probably the cleanest way to do it if you're going to keep people 1099.
Okay. And then
I,
let's
I
go
I have
with,
a follow. Hang on, Charlie, before you keep
yeah.
going. I got a question on that to follow up. What if he is telling them it's got to be a 9 o'clock or 1 o'clock appointments? Is that acceptable too, or should the independent contractor be able to set their own time on this?
So you're in this case, you're speaking from the business owner perspective, where you'd say, hey, this contractor, you're talking to the contractor directly, and you say, all right, well, I need you here at 9. So
Well,
that's
hold on a minute. You got to be a little clear on that. He schedules time slots. So he'll do
okay.
an inspection in the morning and one in the afternoon. And he has pretty much set slots that come in there.
Hmm.
So just a little more context. And correct me
That's
if I'm
fine.
wrong here.
Are they, I mean, they're the ones that are signing up for the shift, for lack of better words, right? Or for the slot.
Yeah, I'm more asking this for Charlie. It's like you've set an appointment for 9 o'clock. They've accepted the job. They've is it okay for a 1099 situation to say you have to be there at 9 o'clock because that's when the appointment is starting? Is that acceptable, or is that
You can
strolling into
say
the
it.
employee lane?
Yeah, I mean, you can say, okay, well, the job, like, you can remain detached, like the job is at 9, so you need to be there at 9. But then you also sort of need to consider like what's contingent on that situation if they don't show up, right? Obviously, it's going to ruin the business relationship between you guys, but really that's the only disciplinary action you can take because they're not a W-2, you know?
Which sums it up pretty good. So another one is going to be training. All right.
Mhm.
So when we bring somebody on, I'd like to recruit people with very little experience, fresh out of school, right? And I want to get them experience. So we let them work with our senior guys until we're comfortable them working on their own. Does that put them into the W-2 spot? And we do pay them as subcontractors because of that too.
How how often are they pretty much just following the schedule of the jobs of the contractors? They're not like at the office unless there's a job for them to.
No, they're not at the office at all. They put themselves on the calendar. Again, they pick and choose the days that they want to work. And then if a job comes in for that day, one other inspector gets the job. And then we're going to say, do you want to go on this one? They say, yeah. And then we send them on that one as an assistant just to get experience.
Okay. That kind of the only thing that worries me about that is because he's going with different business contractors, right? He's not shadowing the same one all the time. He's shadowing
That's
different
correct.
ones.
Yeah.
So at that point, the only thing that concerns me about that, and again, I'm not somebody that can give you legal advice on this, but is that he's sort of still attached to your business, even though he's shadowing multiple other ones. So then it starts to become, is he exclusively working for you? Like, is he being paid by anybody else?
No,
Okay. That's the
he
only
does
thing I
not
would be
get paid by
careful.
them. He gets paid by us.
Right. Then that's the only thing that I would be careful of because exclusivity is something that gets factored into distinguishing W-2s from 1099s all the time.
But he can still work for somebody else if he wants to.
If he wants to, and that's fine, but even if even if like he has the freedom to do that, if he's only exclusively technically on paper working for you and it's a certain amount of hours every week, it might you might be towing the line. To me, I mean it doesn't sound like necessarily W-2 territory, but that'd be at their discretion. I'm not able to quantify exactly what they would use to determine that. So I would, that along with the other example you brought me, I'd say that those might be both that you want to get better
Okay.
clarification on.
And I will. Thank you. And then
Yeah.
another thing is there's a national organization that I belong to, and they let everybody else who's associated with our company, they give us a tremendous discount for them. So I just pay for it. Am
Mhm.
I, just as kind of whatever. It's not mandatory. They don't have to belong to it. If they want to, I cover the fee. Is that part of the required? I mean, it's not required, but I'm
Yeah.
funding it.
No, I think to a certain extent, I mean, especially if you're doing that for everybody, that might be that might be a little bit, I guess benign in that scenario. What you want to avoid is if you have if there's like a certain type of certification or something that somebody needs and you pay for their education and then it's documented and then they continue to work mainly for you. That's sort of when it's like, okay, well, what's going on here? But that doesn't sound like it's too bad.
Well, I also own a school that provides CE, and I like to give that to these guys for free. Is
Hmm.
that also, and that is required that they have to do a certain amount of hours for the state of Illinois. Am I
Yeah.
putting myself in risk there?
That how often how many subcontractors just ballpark would you say that you have consistently working for you on a regular basis?
Well, we're going up to 15 right now.
15. Okay. But they're accepting work. They can and they do accept work from other businesses as well.
I don't know if they do. I know they
Okay.
can. All
Hmm.
right. And I know some of them, I know some do stuff on their own for their own
Yeah.
businesses, but I don't poke my nose what they do or don't do. You know,
Yeah. 100%. Which it's kind of like a like ironic or I guess a double-edged sword, right? Because you don't want to because then you're like that's how you stay in a 1099 relationship, but you also want to know because you want to ensure that they are because that's how you stay in a 1099 relationship. But I think like definitely in that scenario, again, I feel like it would really benefit you to get this in front of an
right.
attorney or maybe even an HR. So an HR business partner, I'm going to walk through that a little bit later in the slideshow too. They basically handle everything from a compliance standpoint. But when you're dealing with Illinois law, that's something that you need. It's so specific. Like there's nothing more specific than the law. And I think that you need to get that exact procedure and those exact details in front of an attorney
Okay.
to make sure you're good. And I wouldn't underestimate it either. I like I've only known one company in my 3 years that got busted for misclassifying employees, but it was blatant. It was blatant. Like, I mean, it was very obvious that those should have been W-2s. And that doesn't really sound like the case here, but better safe than sorry, right?
Absolutely. Thank you. I appreciate that for Bogart and all that time.
Yeah, ask away, and I'll always be straight with you. I'm not gonna give you anything I'm not positive on. So just
Love the
some
reference
basic.
to Bogarting, by the way, Charlie.
Just some basic pros and cons, W-2 employees. So pros, obviously employee retention, more quality control. You can employ disciplinary measures to the employees because they actually work specifically for your company. Therefore, you can hold them to certain standards. Diversity of expected labor. They don't just do the inspection or they don't just handle, what pest control or something like that. Like they are able to perform a myriad of tasks without bringing into question whether or not they should be W-2 or 1099. Career development. Charlie, you mentioned you like getting people with a little bit of experience and sort of giving them a shot and they can learn the ropes. For people that are looking to build a company, again, touch on employee retention. Career development is massive and it'll keep people around for a long time. And then they typically grow with the company. Obviously, it's not all sunshine and rainbows. Cons, on average, 20% more expensive than 1099s are W-2 employees, mostly for tax purposes. But that sort of also ties into the third bullet point of benefits because we already talked about state mandates. More employees you have, the more scrutiny you're going to be under from the IRS and from the state to offer required benefits. Consistent ongoing work and tax management. So with W-2s, as I mentioned before, you're going to be responsible for their state and federal taxes, your quarterly filings for payroll tax, and then issuing W-2 forms at the end of the year, as well as year-end taxes. Granted, you still have to do 1099 forms, but it's a little more labor intensive for W-2s than it is 1099s, which is why I always recommend just get the stuff automated.
Yeah, that was probably one of the
So we
smartest
we
moves I
kind of
made.
covered the.
I'm sorry.
Sorry, what's that?
No, I said it was one of the smartest moves
No,
I
you're
made
fine.
was use a payroll service.
Yeah, it frees up a lot of time. I honestly like streamlining the time is fine and dandy, but it's more so just a lack of a headache. I mean, you're not worried about, paying somebody the wrong amount or you accidentally submit a check twice. Like it's just nice to have it taken care of. But we pretty much covered the reverse of this when we were talking about W-2s, but just to sort of briefly touch on this, 1099s, typically they set their own fees, provide
But don't I
services to
get
multiple
the option
companies.
to agree with those fees?
You do, as long as you're not, as long as you're not like waging them, basically. So you definitely can negotiate fees, or you can even set a fee for a certain thing or a certain job,
Yeah,
but you're not paying them an hourly rate
yeah.
that you have in like an employee handbook.
So more like gig work.
No exclusivity.
Yeah.
Right. Unreimbursed expenses, which we covered, providing their own equipment, their uniform. These are all little ticky-tacky things, but it's what the IRS looks at. No benefits and as needed work. So again, sort of niche work.
What does that mean as needed?
So typically, for example, let's say that you're hiring a home inspector, or let's say that you're in real estate and you have to hire like a pest control company or something like that, or you own a real estate corporation and you need to contract out somebody to inspect for whatever infestation or something like that. That's an as needed laborist task. So that's definitely a 1099. Like you're not going to W-2 somebody that does one specific job for you. You know what I mean? So it's sort of as needed work. Typically staying in your lane, I guess is like another way to
Okay.
put it. Like your home inspectors are going to inspect homes. Like they're not going to notice some of the grout is, inside the house is messed up and retile some stuff. They're all very one dimensional.
It also has to do with you're not guaranteeing them work, correct?
I
Yeah,
don't guarantee the
exactly.
work. Yeah.
Yeah. There's
So
no
I have a
guaranteed work.
question.
Yeah.
So, but if, for example, I got a job and I need a tile guy, and he says, I charge $40 an hour and I can work for you, but as a 1099, on that job. So is he supposed to give you like just a quote, or is it okay, to pay someone to agree by hour, even if he's doing work as a subcontractor?
Yeah, in my experience, it's better to get the lump sum. I mean, if they go out and inspect the job, they should be able to give you at least a good, estimate of what the job's going to cost as a whole. Because a lot of the times you'll hire a company like that and they sort of have subcontractors under them that are going to be working for them as well. So it's
Yeah.
better for you if you're paying the sort of actual job up front, if that makes sense.
Yeah, yeah, I know it's just like sometimes we help each other and like with other contractors, like with the painting or carpentry. And sometimes we, figure out, like we'll pay each other, 35, $40 or whatever, for help as needed, like for a
Right.
week or two or whatever, so
Well, the safe part about doing that as a 1090 or remaining at 1099 is like the punctuated sort of nature of the labor. So you're only doing it for a set amount of time, and then
yeah,
until it's required again or as needed, then you're not doing it anymore, right?
yeah,
So that would be 1099.
yeah, all right.
So just quickly, pros and cons of 1099s. Pros, obviously less expensive, almost 20% less expensive than W-2s. More flexibility. You don't need to worry about proper termination procedure. Hopefully your business relationships work out, but if they don't, you're not worried about, your SUI insurance going up or anything like that. They handle their own taxes at the end of the year, and they have niche specializations. Uh, Cons, again, less control in general, less room for disciplinary actions, less room for you to tell them to show up correctly, as far as wearing uniforms or, whatever business practices there are, getting surveys done at the end. Very little company loyalty, in general. I know certain people, Charlie, you might have been working with contractors for a certain amount of years. You got a great business relationship. A lot of the time, it's sort of a one and done affair. And little company loyalty because of that. Scheduling conflicts, that is typically one of the bigger issues that I've seen with people that lean entirely on 1099s because again, they don't exclusively work for your company. So that could be something that comes up. And potentially risky workers' comp situations, depending on what state you're in. It can sort of muddy the waters just a little bit, depending on what coverage their company has or what type of job they're doing.
So with this, can I ask another question?
Yeah,
So
please.
when s- sometimes, they are like companies are required, if you have a workers' comp, so if you have a sub, they will require, um, you know, certificate of their, workers' comp. But what if the, guy is single guy and he's excluded from his workers, compensation? How, so are we are liable for paying anything on it or
So if you have proper coverage, proper workers' comp coverage, and it takes that into account, you should be all right. But when it comes to on his end, when you say exempt from it, does he have an actual like federal or like a mandated exemption from workers' comp, or does he just not have it?
no, I mean, like, I think he has like a workers' comp, but I know a lot of guys that were self-employed. Like sometimes we would work, in a factory or someplace, and they require us to have like a workers' comp, even though people were like, you know, self-employed.
Hmm.
And I know a lot of guys, like, including me. I know we were like, um, exclude ourselves from being covered under the workers' comp. But if someone that was working for me was covered, so like I think it was for the owners that were not covered. I don't know. It just was kind of like a gray area for me that I never understood, I guess.
Yeah. And I think that with workers' comp especially, because that is a bigger division of, for example, what my company handles, uh, there are so many workers' comp consultants that are always looking to have conversations about this type of thing. And to get into specifics about it, that would definitely be a great conversation to have. From what I'm hearing, and just for anecdotal evidence, from what I've experienced out in the field, doesn't seem to really be too much of an issue. The main thing is that when you get workers' comp coverage for your company that you're running, that you make sure that you fully disclose everything. I mean, they're going to get information out of you regardless, but you really need to fully disclose exactly what types of work you're going to be doing, how many 1099s you have or, have worked with thus far, how many W-2s you have. And when you integrate it with payroll and have a pay-as-you-go plan, it sort of automatically tracks that sort of thing for you. And it just really takes the pressure off in that regard. So, sorry, I know that was sort of a long, drawn out answer to what you asked, but I don't want to give you any misinformation, because this is something I don't want to play around with, obviously.
Mhm.
Can I add
Thanks.
one other thing? Sylvester, were you done? I'm sorry.
Yep.
Okay. Can I add
I'm
one
done.
other thing? A potential con is if you're in a situation where you may be selling your business, a 1099 situation, I have always heard is probably less advantageous, potentially less valuable, less attractive to a buyer than a W-2 situation. Is that, I know that's off topic, but is that an accurate, inaccurate? What's your opinion?
Yeah, 100%. So I mean, let's sort of break it down for a second, right? If you have a company and you have a bunch of W-2 employees that are contractually sort of obligated to do certain things or certain tasks or work for a certain period of time, you have that extra blanket and layer of security. Also, when acquiring somebody else's company or buying a company and you see W-2s on there, you can tell that, okay, they've, actually invested in their business. Not that people that don't have W-2s haven't, but the proof's in the pudding, right? And to them, they sort of see 1099 relationships. Like I could look at Charlie's business, and if he has all 1099 relationships, most of them are probably working with Charlie for the same reason I like working with Charlie, because it's Charlie. And they probably have a great business relationship with him. And that person looking to buy the company might not really be able to carry the torch. And there's nothing in writing really holding them to that standard either. So definitely could see where that make an appraisal a little bit less valuable for sure, when you're purchasing the company.
And I could attest to that. I've been approached a couple times, and once they find out that everybody's a sub, it's kind of a shoe pidgey, like okay, you know.
Yeah. And I mean, you got to make the best decisions for you in the business, obviously. But no, it's a great question and it makes a lot of sense. So here is my wear a helmet slide. So play it safe, have an updated and fully compliant employee handbook. Even if you only have one employee, even if that employee is your family member, it's a nominal fee to to cover you, basically. Um, Utilize an HR business partner and HR service technology. Some we're going to go into in a minute here. Consult a business attorney. I know I've been saying that a lot on this call. I promise I have no commission structure with any attorneys in the city. I just really think it's a good idea. And contracts are great, but they will not save you. And what I mean by that is if you have a contract for services worked or rendered that you engage in with a 1099, and you're basically stating clear as day, this is not a W-2 employee for this, and that reason. Even if you have that signed and acknowledged, it doesn't really matter because the IRS or whoever is doing the auditing of your classification of employees are going to be the ones that decide whether it's an appropriate 1099 or a W-2. So a lot of the times, just because you have a document that you feel might be binding, not going to get you out of trouble. Little pro tip here at the bottom. If you're audited for misclassification of a W-2 employee as a 1099 contractor, it can result in massive fines. I've heard a lot of business owners tell me, well, I don't really care, because they're not going to catch me. And even if they do, like the money I'm saving on not W-2ing these guys is going to more than cover the fines. And unfortunately, it just isn't the case. Because after back taxes, penalties, different types of fees and stuff that they're going to tack onto that, it's literally 37%, sometimes 47% of the money you paid them on top of their 1099 cash flow. So it can potentially be devastating. I know, Charlie, you shared an example of somebody that got busted for that. Where was it, down in Florida, or what was
Yeah, down in Florida.
yeah.
And I like the guy, Wally, and I had this conversation with him a couple times, and his biggest thing is if I would have not used their social security number with the 1099, I would have probably been okay. He
Mm,
says, so if you're going to do that and you're going to push it, make sure that you only you only 1099 the FEIN number and you write all checks to their business. But then I've heard rumors, I don't know how much truth there is, that people get around that and you could still get hurt. So,
Yeah, I wish I was more familiar with the methods that they use to audit people or really look at stuff because I hear, horror stories all the time, but I never really know what triggered an investigation or like what the deal was. And that's why I have like a very blanketed, just cover your bases approach to everything and make sure that even if they do go kicking tires, that they're not gonna, find anything unscrupulous.
well, I know that if it's, and Jamie helped me with this, when I think it's two or more people, if they file a complaint or something, now it's a class action. And
Yeah, it
that's
doesn't.
Wow.
real
I don't
goofy.
even think it has to be two or more. I know who we're talking about. And I don't know the exact scenario there. I know my brother had a large company. It wasn't a 1099 thing, but it was an exempt versus non-exempt thing. And
Yeah.
he had 1,500 employees at one point. It cost him millions and millions and millions of dollars. And it was one person that was pissed, blew the whistle, and yeah, people can really make your life difficult. So
Wow.
be compliant.
Yeah, and I'm trying, you know, but I also kind of want to run the business this way. So,
Yeah. That's the hang
Well,
up with a lot of people.
not to divert attention away from this, be compliant with IDFPR for all of us home inspectors. That get all your documents in a row.
yeah.
One disgruntled person can really make our lives difficult, and I'm speaking from experience on that one.
Yeah, that's rough. I appreciate you actually bringing that up. It ties right into we're wrapping up here. We got a few slides left. I know I've been talking your faces off for about an hour, but we're jumping into HR compliance, which ties directly into what Jamie was talking about here. So I had a video, but audio doesn't work, but it's okay. I actually know what it says anyway. So the video I was going to show you guys essentially breaks down what a PEO is, professional employer organization. I don't know how many of you have encountered one or have even really looked at implementing one into your business. There are some benefits. It takes a certain business model for it to really make sense. But essentially, one of the options you have as far as HR compliance goes and sort of making your life easier from like an administrative duty being streamlined perspective is offering a PEO to your employers. Essentially, it's a co-employer situation where you operate under a larger corporation's EIN number or EIN, because that's redundant. And therefore, you're able to offer large market insurance discounts to your 5 or 10 employee business because of that. Companies on PEOs, just a fun statistic for you guys, go out of business 50% less than companies that aren't on them. One of the benefits that I sort of want to cover in this is multi-state employees. So this might not pertain to too many of the listeners, but if you have employees that are in 3, 4, 5 different states, as we covered earlier in state taxes, there's different tax entities and responsibilities for every state in the country. So if you're in Illinois, you're responsible for the state income tax, you're responsible for your state unemployment income tax. Indiana has a separate state income tax ID, state unemployment insurance tax ID. California, New York, all these different states all have different requirements and different hoops you need to sort of jump through to make sure that you're staying compliant and paying your taxes correctly. As a PEO, PEOs are national. So because you're operating under their EIN, we have all of the tax IDs already created. So hiring a new employee in a different state isn't really your problem anymore. All of that stuff is handled on the back end, and we also would assume liability when it comes to that situation. Uh, payroll payroll processing and tax filing. Again, we covered that earlier with payroll processing. That's all inclusive with PEOs. And an HR BP, which is an HR business partner, and full advisory services. So that's something I've sort of been harping on a lot during this call is why an HR business partner. So an HR business partner is one of the services that we offer most to our clients. It is a SHRM certified HR representative that you're essentially almost contracting, but not really. They will take over the HR responsibilities for your company. They'll give you a diagnostic sort of run through of your business structure and model and see what your processes look like and make sure that you're doing them by the book. They'll build a handbook for you. Um, they'll look into policy legislation, whether it's an employee shows up late to work, what they can be terminated for. They'll assist with training and compliance. For example, in Illinois right now, there's a sexual harassment training that's been mandated for every business throughout the state. Not a lot of people know specifics about that. The HR business partner will put together a training program for you and have that sent out to your employees where they can then complete it and then send proof of completion to you and you're covered. Salary benchmarking. So this is something that I encounter a lot with a lot of the corporations I work with, but some of the smaller businesses too. Again, tying back into employee retention, a lot of people will jump ship even if they're happy at a company because they found somewhere that gives them a 20,000 salary increase. Again, it is multiple times cheaper to try to retain an employee than it is to acquire a new one for a cheaper old salary you were paying the replacement. Streamlined onboarding, that's something that should be a part of your plan, regardless of whether or not you're automating payroll. I know, if you're onboarding a W-2 employee in particular, you need to collect their federal W-4, their state W-4, all their tax information. They need all this stuff done. That should be something that you're able to send to them via email or through their phone. They complete, and then it's sort of stored into your system, going back to data protection, right? It should be something that's sort of stored in your system so that you're not getting your hands dirty. You don't have a bunch of papers flying around your office. They don't bring back a half-completed packet, It's important. And then terminating employees properly is something that an HR VP will walk you through because the last thing you want is an increased SUI rate or a restarted timeline where you're not going to get a lower SUI rate now because somebody filed a grievance. And then just a fun little statistics, 72% of business owners surveyed this year are looking to invest in HR technology. And it shows. I mean, it's impossible to ignore. It's all over LinkedIn. As the more tech progresses, the harder it is to ignore it, essentially. Just some final tips and takeaways. Your workers are your greatest asset, your biggest liability. I know I sound like a broken record at this point, but it's true. Keep your workers mod as low as possible. Keep your SUI rate as low as possible. Streamline administrative duties everywhere you can, especially the time and attendance ones that we covered earlier, because it is a pain in the neck to try to do that manually. Clearly distinguish W-2s and 1099s. If you aren't able to do that yourself, or if you have a lot of hypothetical or very niche situations like we talked about today, talk to an attorney. Don't wait. Consult your CPA about S-Corp elections. If you are structured as an LLC and you believe that your income range falls into that beneficial sort of window for an S-Corp, talk to your CPA. They'll give you advice on it, and it can save you potentially thousands every year. If you have employees, even family members, have a handbook. I put that in caps because a lot of the clients I brought over my last 2 years were coming off the back of some sort of frivolous lawsuit that could have been avoided if they just had it in writing. And last but not least, something that Charlie demonstrates in pretty much all of our interactions, online presence and general reputation is huge. Don't underestimate getting reviews, getting testimonials, and treating your people right. And with that, I will finish and say thank you. This is all my contact information, and I'd love to open it up for any residual questions you guys have.
Kind of asked all my questions as I interrupted
Yeah,
you
me too.
through everything, so sorry.
No, I appreciate it. It kind of turned it into a discussion. I get tired talking at people for a long period of time. So
Oh yeah.
I appreciate you guys participating and letting me do this. Honestly, it's been great meeting all you.
So before you go, tell us about your business though. Give me the whole scoop and what makes you worthy of me. Should I hire you, I guess is the real question. Sell me.
Sure. So I am an HCM business consultant, which again means I sort of focus on employee retention and business development for my clients. There's a lot of companies that people are familiar with that do similar things to us. Paychex. I actually worked for Paychex for a couple of years. ADP, Paylocity. We essentially handle. I know we dove a little bit into PEOs. PEOs is a big part of our company. HR supports a big part of our company. Anything that involves the employee life cycle from hire to retire, we handle. So from job postings to onboarding, retirement plans, payroll streaming, time and attendance, any sort of administrative tasks from here to there is what we try to handle. But mostly we try to sort of consolidate everything into one solution. And so really what sets us apart from, Paychex or ADP is that everything's sort of fully customizable. I've done a couple diagnostics with some prospects now, and it is incredibly, almost annoyingly detailed, but it's the reason that they're able to get the rates that they're able to get. Because if you're running an ice cream shop, you probably don't need multi-state employee support if you have like one shop, and that's something that usually gets lumped into all these other packages, and you're paying for all these services and things that you don't need. So it's really almost like a bespoke, like tailor-made approach to people's business, and that's what allured me to this position in the first place. And end of the day, a lot of these companies are really looking to do the same thing, like Paychex, ADP, Paycor, whoever else. They're all great companies. It's really going to come down to the consultant and the rep that you have. And just to talk numbers for a second, last year, 72%, or was it 73% of my business came from current existing client referrals, because I look to build a book of business based on performance and being reachable. And as corny as that might sound, I mean, if things go wrong, at 9 p.m. on a Sunday, you should be able to get a hold of the person that promised you a solution. And I really live by that mantra. So I think bringing my medical field desire for like sort of helping people kind of keeps me honest. But that's also what sets me apart.
One of the things that I liked with the payroll that I'm working now is, they offer that employees can basically do their own time card, and the system, basically does it all. All I do is hit a button and approve it. But I can't do that with subcontractors. Do you do that with subcontractors? Is that something that'll make my life easier?
So that is something I'm going to have to look into, because I know the reason that we didn't the reason other people don't do that with subcontractors comes down to a liability perspective. I think it's because of what we discussed today, but I'm not sure. So I'll have to look into that. I know it'd make your life a million times easier if they were able to do that. But you also have them operating under the EIN, right?
Correct.
Okay. Yeah, I'm wondering if maybe
That seems to be the trigger.
yeah, I'm thinking
Yeah,
that's
because
probably
if they
why.
were a 1099 with a social security, then they were able to do it. But because it's an EIN, they're not.
Yeah, and I'm assuming that that would probably be constant across companies. I'll look into that definitely, but I'm assuming that would be sort of a general rule of thumb.
And
And,
is
and hence
everybody
probably and hence Charlie, probably a part of the reason that our friend in Florida got in trouble with Social Security. He's a pretty automated guy, and he was probably trying to skirt some stuff there. I don't know. I got to talk to Wally about that a little bit.
Yeah, and we both like Wally a lot. I don't. Yeah, that was a bad thing that happened to him. But bad things happen to people.
Joseph, do you delve into health insurance as well with your company?
Yeah, so our the health insurance branch of our company is one of the biggest ones because PEO, when you go PEO, for example, you have access to a master plan, and that's usually the plan that the PEO has brokered these corporate sort of deals for. So, like for example, we are one of the few that offer BCBS, but health insurance is
Wow.
one of our bigger departments for sure.
We tried
What
to
is
go
a
with the
health fund?
PEO. It's one of the big ones. I want to say Acuity. Is that a big PEO?
Insperity, maybe?
Insperity. We tried to go. We were not a big enough company to go with them, and the main reason at the time was health insurance, and we've since moved on to a different one. But we were able to get on health insurance. It's a big flipping deal, and employee retention is huge because of that.
Oh yeah. Yeah. I'm surprised. Well, typically you need to have like 5 employees. Five like W-2s is typically like the bottom to actually qualify
Yep.
to be on a PEO. But I've seen exceptions made for 4 and even 3. It just depends on sort of business longevity and stuff like that. They look at a lot during the underwriting process. But yeah, health insurance is massive. I mean, it's unfortunately it's the reason that a lot of people stay at jobs that they don't like or see a future in because they can't afford to lose their health insurance. But it's almost mandatory to provide it nowadays.
Shit, some people stay married for it.
Hey,
Yeah.
hey, you talking about me?
No, I'm talking about some people.
I hear you.
I interrupted Sylvester. I'm sorry.
No, actually, yeah, the question was answered already because I didn't know, um, how many, if a single operator, LLC could be under the PEO. So obviously, it's not. You need at least like five W-2s. So
Yeah, it's usually five is the is like the bare minimum. But again, I've seen exceptions made for four and three. It just sort of depends on a few things.
And then, Joe, what's the best way? Because, like I said, we're recording this. I am going to post this in a bunch of our Facebook groups. But if somebody does have any questions and they want to reach out to you, is there email? Is that phone number, a text? What's the best way to send you a message?
Yeah, my email, you can reach out to me and I'll is
Type
that
it in
on
the
here?
chat, would you? That
Yeah, I'll
way,
type
at
this in the
least it'll
chat for
be
you.
here.
He has it on the screen on the PowerPoint screen.
He does? I see LinkedIn,
Yeah,
but I don't see an email.
Joseph Salah. It's right there. Oh, there it is. I just saw it in the chat.
You can email me.
Oh,
I'm more of an on the phone type of guy. That is my cell. So feel free to give me a call. And again, if you know if it's a really specific question and I don't have the answer for it, I work with professionals that will. So feel free to, reach out to me. Even if you just want to you need me to walk you through making your state unemployment insurance ID or something like that, and some companies trying to charge you $150. I mean, give me a call. We'll walk through the basics of it. It's not a problem.
All right, and one thing, just and nobody's going to hold you to the number. You're a one-man home inspector, and you want to get workman's comp, and you're going to walk on a roof. What are we looking at here? Is this $10,000 a month, or $10 a month, or somewhere in between?
I, Charlie, honestly, I can't even ballpark that
All
number
right,
for you. I'm
fair.
sorry. My number knowledge is more so on the administrative fees of things like payroll automation and like HR services.
Sure.
But so they would really need to have a conversation, and then it even comes down to like what's on your website, like that type of stuff.
Really?
So
Wow.
it would be definitely depending on a lot of different factors.
Okay.
but is there like a percentage bracket at all? Like let's say they have, for a tile guy, they have certain, percentage, and I guess if you are inspector and walking on the roof, does it fall,
I heard
more
roofers are
to the like
expensive.
roofing contractors?
Yeah.
Well, I mean, for example, when I worked at Paychex, our workers' comp department wouldn't, if you had anybody going on a roof, they wouldn't cover you, whether it was roofing companies or if it was a home inspection company that was going on a roof to check stuff out. Uh, I even had them, uh, refuse to cover, it wasn't necessarily demolition, it was interior remodeling, but because they were sort of demoing walls sometimes, I guess, they also refuse to cover them. So it really just depends on your company's tolerance threshold. I know with Venture, I've been able to get a couple of workers' comp insurance, those kind of tasks. It took a little bit longer, but I couldn't give you the exact number. It's really sort of tailor-made based on what your company's all about. I guess bottom line is there is coverage out there for companies like that because there needs to be, but it is obviously going to be sometimes dramatically more expensive than a consulting firm would be, you know?
All right.
Okay, so for example, flying drones would be, I guess, something that we should look more into than walking on the roof, I guess, right?
I
Um,
mean, Charlie, I think said it best to me not too long ago. It's like there's nothing quite like getting eyes on the roof, you know? I mean, a drone can, do drone things, and I
yeah,
totally get why people would want to stick with going on top of a roof. But
yeah.
if you were looking to get much cheaper workers' comp coverage or something like that, I mean, that probably would be your best route.
Yeah.
Mm.
Anyone else go? Because I'm going to let Joe go to his family if nobody else has anything. All
thanks,
right.
Joe.
Thanks, Joe. I really appreciate you doing this, and you know, if anybody wants an introduction to him, let me know. You have all his phone number. You can call him directly. But I'll also make a personal introduction. He's an okay guy, you know, so it doesn't get better.
Thank you.
All right, you guys take care. I'm gonna go ahead and end this. And again, Joe, thank you very much.
Thank you, Charlie. Great meeting everybody. Thanks for giving me the opportunity.
Bye bye.